Chapter 5, Housekeeping Inventories. Material budgets. Because executive housekeeper also does what we call budgeting. Budgeting is the process wherein estimates of expenditure are made based on actual performance of an organization. Budgets are the plans by which resources required to generate revenues are allocated. There are two types of budgets that are most commonly used in hotel operations. These two are capital expenditure budgets and operating budgets. Budgets are prepared by the management, such as the executive housekeeper of each department, and the budgets will be submitted to top management pending approval. Once budgets are approved, they are used to guide departments to successful operations over the course of the year or period of time to which they apply. Capital expenditure budgets. Capital expenditure budgets allocate the use of capital assets or budgets, intended expenditure on assets that are not used up in the normal course of operations. Instead, they have a lifespan considerably in excess of 1 year. Such assets are those that are not normally used up in day-to-day operations. These assets add to the capital investment of the hotel organization and thus subjected to depreciation. The hotel building is a capital asset that may be depreciated over a period of 25 to 30 years. Furniture, fixtures, and equipment are capital assets whose depreciation schedules are somewhat shorter, for less than 3, 5, or 7 years. Operating budgets are prepared annually for a fiscal year period. These are expenses related to the day-to-day operating costs of a hotel organization. The most expensive operational costs are the labor costs, which includes the salaries and wages of employees, and employee costs such as health, welfare, and benefit programs. Other costs also include some of the items in this inventory, such as cleaning supplies, guest supplies, linen expense, staff uniform costs, laundry costs, and payroll taxes and property taxes. Operating budgets. So this is an example of an operating budget. The expense in advertising and promotion in the month of January, in fixed $39, in variable $250. In the month of February, fixed $39, variable $250. In the month of March, fixed $39 and variable $100. In business license, the expense in the month of January is $0 in fixed and variable $0. In the month of February, in fixed $0 and variable $0 as well. In the month of March, in fixed $100, in variable $0. In education, in the month of January, the expense is $0 in fixed, in variable $50. In the month of February, in fixed $0, in variable $50. By the month of March, the expense in fixed is $0 and in variable $50. In insurance, by the month of January, the expense in fixed is $50, in variable $0. By the month of February, the in fixed $50 and in variable $0. By the month of March, $50 in fixed and $0 on variable. On office expenses, by the month of January, the expenses on fixed $15 and in variable $25. By the month of February, $15 in fixed, in variable $25. By the month of March, $15 in fixed and in variable $25. Rent or co-working space. By the month of January, the expense in fixed $200 and in variable $0. By the month of February, $200 in fixed and in variable $0. In March, $200 on fixed and $0 on variable. Software. The expense on January is $120 on fixed and $0 on variable. By the month of February, The fixed is $120 and invariable $0. By the month of March, $120 on fixed and invariable $0. And lastly, subcontractor. The expense on fixed on January is $150 and invariable $0. And in February, $150 on fixed and $0 on variable. By the month of March, $150 on fixed and $0 of invariable rather. So the total expense by the month of January in fixed, $574 and in variable, $325. And in the month of February, the total expenses are $574 in fixed and in variable $325. By the month of March, the total expenses are in fixed $674 and in variable $175. So the total monthly expenses overall in the month of January is $899, in February $899 as well, and in March $849. Other important information. First, capital expenditure budget. A budget used to record fixed assets needed for the upcoming fiscal year. Second and lastly is the operating budget. Operating budgets have a direct relationship to the day-to-day revenue resulting from selling guest rooms.
Checklist for preparing a budget. Know the present position of the hotel. Review the previous year's financial statement. Look at the major sports events, festivals, and holiday events for the year ahead. Check for any expansions, plans, redecorating, raising standards, increase or decrease of staff. Check for any expansion plans, redecorating, raising standards, increase or decrease of staff. Check on the supplies needed, considered automation, new technology, and better products. Take each cost heading separately and compile to form final budget. Plan for practical goals and do not over budget. Take into account the inflation percentage prepared by looking at past experience, present knowledge, and judgment of what likely to happen. Identify areas which can or cannot be controlled. Review wages and salaries, operating costs and expenditure, that is variable, semi-variable, and fixed. Plan with the following year's tax policies in mind. Take into consideration any new laws or regulations or policies that may come into effect. Prepare throughout the year for the next year's budget. Nothing changes and scope for improvement. Inventory control. Inventory control is the management function of classifying, ordering, storing, issuing, and accounting for items of value. Executive housekeeper not only control the inventory but also the competent in their selection, use, and maintenance to account for the cost of housekeeping operating assets, and physical inventories are conducted regularly. The purpose of taking physical inventories is to find out what amounts of items are on hand and to work out its current market price. The cost of items used are expensed against the revenue produced for the same period of time. The percentage obtained are then compared to the amounts budgeted. Storage must be organized and allotted to the various categories of material, parts, must be established accounting methods, must be coordinate fiscal inventory rules, and producers must be established. Most of all, organization system and forethought or inventory control are needed to preclude unnecessary loss and waste. Cleaning and guest supply inventory. Date, inventory by item, laundry bags, units, BDL/500, units on hand, par stock, 2, reorder, item, laundry list, EA/260, units on hand, par stock, 250, reorder, item, room service menus, EA, unit on hand, par stock, reorder. Item, stationery bag, CS/1000. Units on hand, par stock, 1. Stationery, CS/10 PK, par stock, 1. Envelopes, CS/1001, par stock. Envelopes, CS/1000, par stock, 1. Postcards, CS/10BX, par stock, 1.5. Sanitary bags, CS/1000, par stock, 1. Utility bags, CS/1000, 1.5. Guest service directory, EA, par stock, 500. Choose your credit, EA, 500, par stock. Advance reg forms, EA, par stock, 1,000. Hotel maps, CS/1000, par stock. Facial tissue, CS/36BX3. Toilet tissue, CS/96RL2, par stock. Bath soap, CS/500, 5, par stock. Toilet seat strips, CS/10,000, 0.5, par stock. Name cards, CS1, par stock. AMX application, CS 0.5, par stock. 100W, CS 0.5, par stock. Light bulbs, 60W, CS 0.5, par stock. Phone books, EA 25, par stocks. Bibles, EA 12, par stocks. Hammers or wood, CS/50, 0.5, par stock. Figure 5.2, cleaning and guest supply inventory form indicating units by which items are ordered and shipped, par stock, units on hand and quantities to be reordered. In order to manage the inventories, first of all, executive housekeeper must determine the par number or the standard number of recycled inventoried items that must be on hand to support daily housekeeping operations. Minimum or maximum level is used to measure the on-hand quantity for the non-recycled inventoried items. When quantities of a non-recycled items reach the minimum level established for the item supplies must to be replenished to bring the inventory back to the maximum level. A. Minimum quantity is the fewest number of purchase units that should be in stock at any time. The inventory should never fall below the minimum quantity. B. Maximum quantity is the greatest number of purchase units that should be in stock anytime. It must be consistent with available storage space and must not be so high that large amount of cash are tied up.
Chapter 5, People and LIFO Methods of Housekeeping Inventory. A. First in, first out is an asset management and valuation method in which inventory items produced or acquired first are sold, used, or disposed of first than new were acquired is the first item out. B. Last in, first out, LIFO. The inventory valuation method opposite to FIFO is LIFO, where the last item purchased or acquired is the first item out. Material classification. The classification of material is the first step in the process by which items of value will be accounted for and controlled. Classification of material is prerequisite to controlling the large number of items used in the housekeeping department. We classify housekeeping materials as fixed assets and operating assets. Fixed assets include land, building, and equipment. In hotel organization, therefore, furniture fixtures, FFE, are part of the fixed assets. Fixed asset depreciate at the end of fiscal year. Guest room furniture and facility and equipment, 7 years category. 1. Carpet. 2. Sleep equipment, box springs, mattress, studio couch, chair bed, wall bed. And 3. Furniture, bedside table, tables, and chair desk dressers. 4. Fixtures, bedside tables, and chairs.
Operating asset. Operating assets are not depreciated. They must be inventoried regularly and are usually under the control of the executive housekeeper. They are usually subcategorized into cleaning supplies, guest supplies, linens, and uniforms. First is cleaning supplies. All-purpose cleaner, disinfectant, germicidal, window cleaner, acid bow cleaner, metal polish, furniture polish, lemon oil, spray bottles, rubber gloves, scrubbing pads. Next, guest supplies. Guest expenditure, shampoo, stationery, notepad, pen, magazine, bath soap, facial soap. Guest essential. Bible, hanger, door sign, glass, shower mats. Guest loan item, hair dryer, blanket, universal charger, razor, healing pads, hot water bottles. Linens. The executive housekeeper is responsible for the storage, issuing, use, and replacement of 3 main types of linens inventories. First, bed. Bed skirt, mattress, pads, or cover sheet, pillowcases, duvet chums. Next, bath. Bath towel, hand towel, specialty towel, washcloth, fabric, bath mats. And last, table. Tablecloth, table napkin, table skirting, table runner, seat cover. Uniform. Section housekeeper, senior housekeeper, section housekeeper aide, other supervisor. Purchasing housekeeping materials. Purchasing is a subroutine that can take up a part of each day for the executive housekeeper. Even though some hotel chains have centralized national purchasing of items that can bring quality discount. For the most part, cleaning and guest supplies will be purchased either by the purchasing agent in the hotel, if there is one, or by the department head for their respective department. The executive housekeeper should protest and approve all items purchased for the housekeeping department. The process of buying material should involve finding the best product, price, and service. Buyers should understand how to conduct value analysis. The executive housekeeper is ultimately responsible for the cost and result of what is purchased.